Yes, I can see price action. Okay, yes, I can see your screen now.
So we do two points to validate an SNR. We do 2 points. First point is a touch with a wick, not a body. We must not see a body at the level of SNR. What we want to see is a touch with a wick. A wick means a price rejection. So the first thing we want to see is we want to see a touch with a wick. What is a wick? Is simply a price rejection of an SNR level. So that is what we want to see in our at the level of SNR. That's what we want to see. We want to see price tap into it and got rejected. Once we confirm, that confirms that SNR is a valid entry level. Like this one now. This touches with a wick. This one, then this one. It touches it with a wick, so it confirms that level can be traded. It can be traded. That's what it confirms. Confirm that level can be traded. If you don't see a wick, if it is body with the body, you don't trade it. You don't trade it. That this place, this is a wick that confirms that this level can be traded because price got rejected off the level. Price take it out and got close above it with a wick. This place we have this place, price tap into it, then probably later on price break through it. It break through it. So it becomes what? It becomes a breakout. And here price tap into it. It got rejected. Then the second day it went up higher. It closed below it. We got a new fresh. Here you cannot trade this one as what as anything because of what? Because price close with a body below the SNR. So we cannot take this as what as a buy anymore because it is not a rejection. It's a full-blown candlestick flow with a close below the SNR. So like this place now, this place, this is an SNR. Price close below it here. You cannot buy yet until when you see a rejection of it. Then later on, it became a fresh here when the body closed below it. It became a fresh, and price came in to tap into it and got rejected below the SNR level. So you will sell. You will sell. Later on, another one came into it and still tap into that place and got rejected. You are still selling. As long as you have a wick at that level of this thing, you are still selling. Here we have a price tap into this place here, got rejected upward. Probably you buy and because this place is a fresh level, the price is a fresh level. So price tap into the previous this thing and got rejected. And later it turns into what? A breakout. Price break through it below and close below with a full body. That's a breakout. That's a breakout. It becomes the place now become a fresh level. But if you look into your back, you see that this place here becomes a fresh level here. So that's why price tap into it here. The place become a fresh level. Price tap into it here, tap into it, tap into it, tap into it. Then it became fresh here. Price came back and tapped into it. Then got rejected downwards. So you are still selling. Then we have another one here. This is a single candlestick tapping into the SNR level. So it became what? It became a good, valid sell for us because of what we call a rejected below the SNR level. It became a good sell point. So that is how to use your touch to validate if you are going to sell or buy. If you are going to sell or buy, that's how to validate it. Like for example, this place we have this here. Can you see breakout? Good breakout here. Price break out of this gap level and it got into it back. Tap into it. It tapped into it. Then what happened? It got bounced off it. it got rejected and closed above it. That's a strong signal to buy. Imagine the number of pips you will have covered from that place to this place, almost about a 404,000 pips, because of what? Because of the validation that happens here with a wick. Then furthermore, we have price still continue to tap into it. This place will not buy here because it comes with a body of candlestick. This is a volume. This is a volume. But when we get a rejection here, we quickly do what? We quickly buy into it. You get a rejection here. At this level of this became a fresh. It was tapped into here. It became on fresh. Tapped into on fresh. Then it was broken through. It became fresh. Then price later came down to tap into it as a fresh level of gap. So price tap into it, then it moves higher. When it moves higher, it gets to this place. We have a gap here. Then price tap into it. We draw back down. That's a sell, a good sell. So that's how you'll be using your touch of a wick to validate an entry up and down, sell, buy, sell, buy. You want to see a wick that will tap into a particular level and get rejected. That is what you want to validate, because you need a validation. If there's no validation, no trade. No validation, no trade. Yeah, that is a simple rule. Just follow it. No validation, no trade. Because this increases your odds of winning the trade. Yeah. When so many points support your decision, it gives you confidence to trade. It gives you confidence. But when you don't have enough points, enough clues, enough facts that will guarantee your decision, why would you bother yourself to when you enter a trade and become struggling to meet up? You will not be able to be comfortable. So, but if it is a good trade, even if it is still on the negative side, you have a confidence that it will return. Because of what? Because many points are gathered together to support your motion or your decision. Yeah, so that is the essence of a touch. Then we talk about the liquidity sweep. Liquidity sweep is simply is when price grab the previous support and resistance. That's the previous high and the low. It could be this is a liquidity sweep. Liquidity sweep is simply when price tap into the previous high and take it out and got rejected downward. By the time you see this place, this previous high has been breached, and price, can you see the level of the breach here? Price went up, came down, and finally closed below it. This grab here, this sweep, this breakout with a wick here above the previous week high. So that's what we call a liquidity sweep. Because there's a liquidity above the high of this week. There's a liquidity above that high. There's a liquidity below this lower week here. There's a liquidity. So when you see price tap into that low and takes out liquidity and is running upward, that's a very strong signal that the liquidity will be swept off this low. Liquidity will be swept off this high. Liquidity will be swept off this low. So price will go to the opposite side to distribute. So that was my AMD concept, trading concept. So I'm now using that one now to validate my SNR. Apart from the week, we want to see. We will not rest until when we see enough clues that contribute, that will contribute to our decision, whether you want to buy or you want to sell. The Bible says when more than two witnesses are established, I'm trying to remember the Bible quotes. Yeah, that when you see two or more witnesses, supporting particular, that means this thing has been established. Yeah, a fact has been established. So it is now real. So here you have not only just a weak rejection at level of SNR, you have a liquidity sweep. So when you get a liquidity sweep, you can be very confident that the trade will move in the direction of that candlestick. Yeah. I'm sleeping. So that's liquidity sweep. This is an SNR level. Then price come into it, tap into it with a sweep. It's a sweep. You will go to trade and a trade chart and see how this happens up and down in a trade. Yeah, this is my trade chart examples here. So we will go into live trade chart and see how it happens. So it can be like this. It doesn't even have to be just close by it. It could be a gap from it. As long as it takes out the previous high at the level of like this place now. You see this place? You can see that this place here, we have one high here, we have one high here, and then price tap into this level of SNR. It took out 1, 2 to tap into this. So the ICT called it an inducement. Yeah. So I don't want to confuse you. As long as we have this high that has been taken out by this high that tap into this, this high, all this week does not tap into this, right? They never tap into this level. It's just a small point to get to that level, but they never tap into it. So this place is still considered as what? As fresh. Then price went up and tapped into this level. So clear out the liquidities that are above these two highs. You clear them out, tap into the level, then what happened next? You see another liquidity sweep here. This one is close by, just one single candlestick. But this one, they are far from this place. So it doesn't have to be like all the time you must see. Like, for example, this place now. Can you see it? 1, 2, 3. Can you see the distance? But as long as it has taken up the previous high, so we consider it as a liquidity sweep. So you can imagine what happened here. The same thing happens here. All these points I'm showing you, you must master them because they will help you. You're not seeing my charts. Okay, shit. Shit. Oh. Okay, you should be able to see it now. Like I was telling you that a liquidity sweep is simply when price tap into a previous candlestick high. It took it out. Even if it's just with only one pips above the previous high. That's a liquidity sweep. That's a liquidity sweep. As long as it doesn't need to, but the candlestick does not need to close above this level of previous high to give you a sweep. As long as it has been breached, price broke through it, and we drop back, and you see this liquidity, this pin bar like this above this place, then and it comes up at the level of your SNR. So this CHoCH now carries what? It carries liquidity sweep. That means price sweep off the liquidity. We tell you that I normally tell you that the price is looking for. I mean, the market players, the major market players are looking for where to take out liquidity. They will trade above resistance and trade below support level. That is their business. They don't have trading plan. What they do is they put money when they see a particular support and resistance. They put money to that place. They draw attention of people to it, and people come into it. When people come into it, they move the price against them. They sweep off a lot of liquidity there. Yeah. So above the candlestick high and candlestick low, there lies liquidity. And it is liquidity that moves the market up and down. Liquidity moves the market up and down. It is liquidity. The market makers are looking for where those liquidity are being placed so that they can eat up and make money out of people say this thing. Yes. So this is what we call liquidity. This is the high taken out, it becomes a liquidity sweep. This is the low taken out, it becomes a liquidity sweep. So now I said it could be a little distance from the candlestick that touch the S&R, as long as it has taken out a previous high or a previous low. It doesn't have to stay close to it. It could be more than 10 candlesticks in between. As long as it takes out this low, before it got to touch and reject this S&R level. As long as this low has been swept off, that's a good point for you. That's a good point for you to hold on to, that supports your move. I mean, your decision to sell or buy. Now, I'll show you in chart where we have multiple different this that this thing has really proved so highly predictive. If you use this simple this thing with your it increases the odds of your winning trade. You can see this place now. See this place, this place, this place. This is an S&R. Price tap into this place. Price tap into this place. You sweep out this liquidity here. Yeah. Then this place here. This place here. All this candlestick does not tap into this. They are yet to tap into it. So this may because this line here becomes a fresh S&R. And this price went up higher to tap into it. It tapped into it with a liquidity sweep. Can you see as it break above this high? Then all these places, it break above them to tap into this line. So that gives you confidence that this thing is going to sell so huge, because it has grabbed a lot of liquidity here, liquidity here, liquidity here, liquidity here. The same thing happened to this place here. It broke through here, then it grabbed liquidity above this high. It came down. The same thing happened here. It sold off here by taking out liquidity below this low. It took out liquidity below that low and start moving higher. The same thing happened here. Can you see it? Price grab this liquidity here. It breaks below this low here and tap into this open close S&R. So those are the points you must look out for. At the level of touch, is there a liquidity? You must answer that question. Is there a liquidity sweep? Does the price that touch the S&R, does this sweep off a low or high? Like this place, for example, this place, this is an open close, this and price tap into it with a liquidity sweep. You can imagine the big rally there. This is a liquidity sweep. Price tap into this S&R, classic S&R, with what? With a liquidity above, swept above this place. See, the same thing happened here. See liquidity swept off here. As long as this candle can breach the previous high, even if it is by 1 point, it has swept off liquidity. And price drop. It drops so huge. So we go to so that the 2 points you must look out for when you are trading. What you must ask yourself that question: does that touch? Does the price rejection carry liquidity sweep? So that it will increase your odds, it will increase your confidence, it will increase your probability to win the trade over and over again. So that is what we call liquidity sweep. You can imagine, for example, this place now. This liquidity sweep, can you see it? Can you see it? This candle here. This is the high of the candle. Another one came in here and broke through it. This is a liquidity sweep. It broke through it. It took a liquidity of that high, tapped into the many S&Rs here, and got rejected back. You will sell straight. You can imagine the second day. how many pips you have made here in second day. You've made almost about 178 pips just in a day. Because of what? Because of this confidence you got here. Because of this confidence you got here. So I want you to master this thing very well. Open up your chart and continue to see a touch of an SNR with a level. Like, see what happened here in this place. See what happened. This is a very clear one. Because this is a fresh level of SNR, a gap, fresh level here. Then price came in to tap into it. And before it tapped into this, it has grabbed the liquidity below this low. It has grabbed it and fall into it. You can imagine the push higher. It got to this place. It gave another liquidity sweep. You can imagine the number of this thing here you will have captured. Because of what? Because of the clues you got from here. So you must trade with a lot of facts. It's just like a lawyer in a law court. Before you win a case against your opponent, you must have a reference point. What is your reference point? Before you win a case, you must be able to argue with facts. So finally the judge will now say, this case is, because he's convinced. So it's the depth of your dissing, what you know, and the power of your dissing that lies within you. I'm sleeping. So that's the liquidity. Now we want to see some trade. Yeah. Okay, let me do this one. Let's do this one. Let's do this one like this. Let's do this one like this. Now, this is a bullish, a kind of doji bullish, bullish candle. So we have our this thing here. We have our support level there. So our support level there as an SNR. So what happens? Let's see the next candlestick. So we have our distance as SNR. Oh, that's cut off again. Yeah. So let's see the next candlestick. This is our SNR, right? We want to see candlestick that will come into this place and tap into it with a rejection. That's what we want to see. Wow, powerful. This is a week off this level. Then before that, do you see something here? Do you see that? Can you see that this place here, this place here comes up higher than this? This is what we call a liquidity sweep, LS or LQ. We can do it like this. Can you see that? This is a liquidity sweep. The price that tap into this place take off the low of this candlestick. He breached it. Can you see the break, a kind of a breach here? He breached this low. So that's a liquidity sweep. At SNR level, you will not waste time at all than to do what to put up your your long this thing, put your stop loss at the lowest candlestick low. Very, very high probability trade. Because of what? Because we have our scenario here. So you put your stop loss there. So you use a stop loss of just 75 pips. So this is almost about 7.57 risk reward ratio, RR, to this level. Let's therefore target this fresh this in here. So you can imagine the level of your this in there. You are targeting almost about to this level. We are targeting almost about 248 pips, 249 pips. That's our target. 249 pips. Imagine he blasts through it. Because of what? Because of this condition that was met here. This guy has already tapped into this liquidity and took it off. That's for buy trade. So you repeat it for sell trade. Like for example, this place now, if you look at this place, if you don't see it in a higher time frame, I measure it in that manner, that if you don't see liquidity sweep in a higher time frame, that you should go to a lower time frame, one time frame lower or 2 time frame lower. That if you don't see it, you go to a lower time frame. That is what I wrote in the book. That if you don't see, if your HF a higher time frame touch does not carry a liquidity sweep, you will refine to a lower time frame to see it. What do you mean by that? You switch over to a lower time frame from a daily time frame or for a weekly time frame. You switch over to 4 hours or 1 hour. It must carry liquidity. So this is what I do. This is you can imagine, this is my examples. If this is a valid touch now, because you carry liquidity sweep. This is a valid touch. You carry liquidity sweep. This is invalid because in a higher time frame, this one does not carry this. But when you refine it, you see a liquidity sweep in a lower time frame. I make you to validate it and you enter your trade. For example, this place now, you see this place now, see the touch of this level. Can you see this place does not, it comes higher than this? Well, because this place already have, this one already have liquidity sweep. And again, if you switch it to 4 hours, this is 4 hours, we switch it to 4 hours, we get a liquidity sweep. See the 4 hours of it. This is it. We have a liquidity sweep that tap into the level of this